Thank you all for being here. Good morning, everyone. I've had the privilege of moderating or introducing this subject matter for, I think, the last 4 or 5 years here at the Chamber Insurance Summit. And how the tone has changed, how the theme has changed. And today, with Barry and I, we're going to kind of continue on the theme that was laid out this morning by both the CFO and the Commissioner. And we're going to talk about kind of where we've been, where we are now, where you will see Citizens going in the future. And there were a few anecdotal pieces of information that the Commissioner and CFO gave earlier, but it really is, it's astounding. 3 years ago, we sat at a table much like this and talked about the fact that Citizens had 1.4, almost 1.5 million policies in force. And there were a lot of smart people walking around talking about it was only a matter of time before we hit 2 million policies in the state's residual market. And where was the ceiling? And now we sit here 3 years later as a result of, I believe, a great deal of positive leadership from you and your team, legislative leaders, and certainly our cabinet members to get us where we are today at almost 600,000 policies. It's just, it really is incredible. Barry, let's just start at, 50,000 feet. I just kind of gave a 3-year comparison, but there's so much more information that can be provided there, both in policy count comparisons, total insured value that has been reduced there at Citizens. Can you just kind of walk us through? You came on in 2012, and I'm sure in your wildest dreams couldn't have imagined what you were walking into, and frankly, where we are today. So just kind of tell us a little bit about where we were when you walked in the door, where we were prior, and where we are today.
Yeah, let me start with the numbers that have already been quoted by CFO Atwater and Commissioner McCarty. In August of 2012, we peaked at a little over 1.5 million policies. We ended last year, 2014, at 558,000. We will end January, 57,000 will come out in January. So we'll end January in the 500. Likely the 610, 620,000 range, because we're still writing, by the way, roughly 12, 13,000 policies per month coming in the front door. And then we still have February and March OIR approvals of around 250,000 policies. So about a third of those will come out on average. So, you're going to go into wind season pretty darn close to 550,000 policies if we keep on track. The numbers behind that are the astounding numbers. I mean, we started out at about $500 billion in exposure, $515 billion. We are already below $200 billion in exposure. And then, of course, I think for this group, I think the number one number, the one number quote that I'll quote is pretty incredible, and that's written premium. We were at $3.2 billion. We ended the year, we will end in 2015 at about $1.6 billion. Now, the impact on that, on the market, is twofold. Number one, we have funded the growth of numerous new companies and current companies that have used the takeout program. And not only that, that business was not reinsured previously.
Right.
So it has a secondary benefit because all of that business is now in the reinsurance market, so you really get a double whammy.
Right. Well, you've alluded to it. There's multiple ways that you all are working now to either keep policies out at the front end or have policies taken out on the back end. Takeout is something that has been going on for quite some time. At various levels of participation from company level. Clearinghouse is now a full year into implementation. But let's talk about the depopulation numbers. As I said, over the years, those numbers vary. They can be as high as 200,000, as low as 50,000, and anywhere in between. And I think last year, the number was quite a bit higher than that. What do you attribute, that success to, the number of policies that you all had removed from Citizens just last year alone?
Well, I'm glad you asked the question, because I think there's some misunderstanding, frankly, about the relationship between the clearinghouse and DPOP. Now, if I'm an insurance company, why wouldn't I participate in DPOP? We initially had 1.5 million policies, and by the way, over 50% of those policies had never been shopped. They came in through a direct writer mechanism, so they really had not been shopped.
Right.
So we have all this good business available. Now I'm coming to you and I'm saying, look, I will give you all my data so you can take a look at loss history, you can take a look at classification, you can tear that business apart, and you can pick up 10, 20, 50,000 policies with no acquisition cost. No acquisition cost.
No ceding commission.
Zero ceding commission, because I think one of the very positive things they had just accomplished before I came on board was really eliminate that ceding commission, 16% ceding commission. We're going to upfront the unearned premium after the assumption date. What's to lose? I mean, it's a huge opportunity for companies. And two things happened. Number one, the current companies started participating. And then secondly, it's drawing new capital. You've got companies like Epic and Mount Beacon now that are going after the mobile home marketplace. They're literally going after policies and classifications of policies. I never thought in a million years, 2 years ago, they would find attractive.
Right.
So depopulation and the depopulation program has just gone extraordinarily well. Now, one of the drivers also is clearinghouse, because you have to look at clearinghouse two ways. Number one, it's a catalyst. I'm a company. What do I want to do? Do I want to pick up 10,000 policies without any competition whatsoever? Or do I want to wait until this business goes through the clearinghouse and then is quoted by 13 additional companies? So when you take a look at the comparison between DPOP and clearinghouse, you have to recognize that people want those policies out before they start going through the clearinghouse mechanism.
Absolutely.
And when evaluating the clearinghouse, we also have to understand that the clearinghouse, it's in its infancy. We're less than a year in. We've only got HO3 in there. We'll be adding both, the DP policies and the mobile home policies this coming year. But it's pretty extraordinary. We've got 13 companies that are actually actively participating on new business. We have 8 companies that are participating on the renewal, process. And we have 22 companies that will be online by the end of 2015. And by the way, when we hit those 22 companies, that will represent a little over 83% of the entire Florida marketplace. So,
which is really exactly what you all at Citizens, the Florida legislature, and other interested parties, when we were talking about the clearinghouse, and that is what it was all about. It was all about making sure that those policies that previously weren't shopped in the marketplace, because many people believed that there was capacity available to write those, let's make sure that those customers see all of the options that are available to them. And it's really, even though it is only a year old, and before we get into kind of some of the questions about the clearinghouse and the costs and whether it's been worth it, just to clear up one piece of information on takeout. We see the numbers in the newspaper that the OIR has approved X number of policies for takeout. Let's just say, for sake of round numbers, 100,000 policies. And then at the end of the month, 50,000 come out. Can you explain to me that dynamic and why it happens that way? Because I think there were close to 1 million policies that were tagged last year, and the number that actually came out is much lower than that.
Right.
Why is that?
Well, let's use the real numbers. So
okay.
OIR last year approved 1.4 million policies for takeout, 1.4 million. At the end of the year, 416,000 policies actually came out of Citizens in 2014. And the reason for the difference is when you start out with 1.4 million, and then there's a step-down process, because companies never ultimately take out the number that they get approved. Very, very, very rarely. So you got about a 20% drop between the companies, the number of policies approved and the number of policies that the companies actually, take out. Then you have another drop, because when the final numbers are in, the companies will drop off, through their selection criteria. They'll do a further drop. And then, of course, the difference between Depop and clearinghouse is that the Depop has consumer choice and agent choice. So in many cases, you'll get roughly a 10% reduction because the agent does not want to do business with the company selected for takeout. So about 10% of the business is what they call agency decline. And then, of course, you have the consumer choice. So, and you have two ways, 2 points in time where the consumer can say, no, I'm going to opt out. 30 days before the assumption date, they can send in an opt-out form. And then they still have, even after they get notification for the company of the assumption date, they still have 30 days after the assumption date, to say, no, I changed my mind, I'm opting out back. So when you start comparing, and roughly it's, consumer choice is roughly 35% reduction, agency declines 10% reduction, and then the prior reduction, of course, in terms of the actual selection on the part of the companies. So that's how you get basically from the 1.4 million OIR approvals down to the 416,000.
And I guess, going a step further on the consumer opt-out, do you believe that going forward, now that there's the two-prong approach of both takeout and clearinghouse, you believe that through agents and through the media and through you all's efforts, that consumers will start to become better aware of the fact that, okay, I might be able to opt out of this takeout, but ultimately at renewal, when I get run through the clearinghouse, I don't have that same option if certain criteria is met. Right. I mean, I would think that that would ultimately, over time, you would start to see your consumer opt-out rate on takeout start to go down because they're going to realize that they're going to come out one way or the other. Do you think that that's the case, or are you already seeing signs of that?
Well, we are, because if you so let's compare basically the takeout rates, for example, between the two. We've received some comments that, geez, the clearinghouse really isn't working. I would strongly, disagree with that statement. Number one, even on a pure basis, about 14,800 policies have been declared ineligible. That's about $4 billion in exposure, and that's just on the front end, on the new business. Right. Now, the controversy seems to exist on renewal. And if you consider how it works in the real world, 2 years ago, the clearinghouse would have probably eliminated about 30% more of the policies. Now, why isn't it today? Because they're already out. On a monthly basis, roughly 35% of our entire book of business has already been tagged for assumption and removal. So obviously, the percentage of business going out, through the clearinghouse mechanism has dropped off significantly. But I do believe there's a growing realization that during Depop, you have this 15% standard, right? Right. For clearinghouse, you don't. It's equal to, if you're equal to or better than the citizens' rate, you're gone. Right. So the other I think thing that may give agents some solace, because by the way, I really understand the impact this has had. I mean, if you take a look at the numbers, probably 70% of an agent's customers have received a takeout letter. So here you've got large agencies, and they're having to deal with, all of this, quote, turmoil, sure, in the marketplace. I would suggest to you that that's going to drop off over time because, let's face it, Depop is a law of diminishing returns. I still, by the way, would strongly support companies looking at our current book of business because I believe the appetite's changing. more businesses getting closer and closer to rate adequacy
Sure.
as we go forward.
Which is really something that we've all been talking about for years and years and years. And I think that while it may not have been exactly what us in the industry wanted when the glide path was put in place, I mean, it has turned out to be working, and it's been a way to get to where we needed to be, understanding political concerns. You know, I mean, had we gone all the way to where some wanted us to go with citizens' rate increases, we've seen the reaction from the Florida legislature about how that works. So, you know, it's taken time, but I think that that's right on point, and that providing now voluntary markets the opportunity to compete for that business, now that you all are not the first option and your pricing is much closer to in line with what private carriers are able to offer.
Yeah, I mean, I think if you take a look what's happened over the last 2.5 years, I think the legislature has made some really exceptional decisions. I mean, let's face it, you saw the economic indicators a little while ago. This has been a very, very delicate balance.
Right.
You know, how can we get rates towards rate adequacy and at the same time really not have, you know, an impact on the overall economy that really could slow the economy down. And, you know, left to, someone disagreed with the comment. So I think it's been a delicate balance.
Right.
And I think we've handled it well. Without any question, I don't know who originally came up with the concept of the glide path, but the glide path has worked, and it's worked extraordinarily well. There are coastal areas where the glide path, I think I saw an article the other day, what was the James Madison Institute report that shows basically in Miami-Dade, you know, it's going to be 2020 or 2022 before you get to rate adequacy utilizing the glide path in some of the wind-only, you know, areas. But overall, let's face it, you know, for the first time in a decade, you know, we found a 3.7% rate decrease last year.
Mm-hmm.
That was a controversial decrease, by the way, but you know, bottom line is the companies are saying, what are you doing?
Sure.
You know, you're trying to compete in this marketplace again. And my answer is, look, we're following our actuarial indication, period. If they go up, we follow them. They come down, we follow them. But it's also very worthwhile pointing out that while virtually all multi-peril, homeowners multi-peril rates went down, an average of 3.7%. I don't believe there's a county that actually went up in multi-peril. But if you take a look at wind-only, you know, you got the Tri-County area that's still going up, you know, an average between 5 and 8%. And then you have, you know, northern Florida. You know, you've got St. John, Volusia, Flagler, you know, counties that are still going up. You go over to the West Coast, you've got Pinellas, and you've got Sarasota that are still going up, and then you out in the peninsula, same deal. So on the wind-only rates are still going up. We're still 25 to 50% inadequate, you know, in some areas. Mm-hmm. And by the way, inadequacy for us is not the same as inadequacy for a
Sure.
company.
Yeah, it's a different
because we do not get the opportunity to really file for, you know, full reinsurance charge the way, you know, typical companies do.
Well, that's interesting that you know, you're filing for a statewide average decrease on the multi-peril line, but the multi-peril line is where you have seen the vast majority of depopulation come from. So you can't make the argument that there's been an adverse, you know, effect on depopulation when that is what most of the business is that's currently coming out.
You know, that's a fascinating observation, but it's something that's changing rapidly.
Okay.
A year ago, I would never, ever imagine a company coming to us and saying, hey, I want to write mobile homes.
Right. We're hearing it from our agents that are they're in shock.
And I took a low, you know, a year ago. I said, well, how low can you go? 625,000 was the number I threw out.
Right.
But within that, I assumed that mobile homes built 1994 and prior
You'd keep.
would keep.
Right.
We have one company right now that I think got over 100,000 OIR approvals for mobile homes. I've already taken out 30,000 plus mobile homes.
Wow.
And most of them, by the way, are 1994 and prior. And if you really dig into that book of business, it's probably a darn smart decision on the part of the companies, because there's some very interesting dynamics in terms of how we have to file using the Florida model.
Oh, really?
And so they've identified what they think is a rate, redundancy within the mobile home book of business. So, and commercial.
Right.
Coastal account is down 44% in 2 years. So, and the companies are going after the larger risks.
Right.
So it's not just it's not just PLA anymore.
Right.
It's really coastal. It's wind only, and more companies are jumping on the bandwagon as far as the commercial business. And that's why, while we're about 56 down in policies count, we're about 65% down in terms of overall exposure because many companies are going for the larger risks.
Right. Well, and that was before we move on to kind of looking into the future. So we talked about the clearinghouse dynamic and how it's affected takeout and so forth. The piece of information about the clearinghouse that I hear reported, or the question that I often receive, and if I receive it often, I'm sure you receive it a lot more often, is the correlation of the cost. Was the cost that you have spent worth those policies that have been deemed ineligible? Well, the first assumption usually in that question is that they're taking the total cost that was allocated in the contract, not what you all have spent. And so that immediately skews the numbers. To date, what was the total contract for? The total contract was for $42, $52
yeah, I think
million
it was
like
something in the $10 million range.
Okay.
But Steve Bitar, who by the way is a really, really bright young man, he runs the clearinghouse and
excellent
Depop.
asset for you all.
But he did he was very smart. The bottom line is, the contract that we negotiated really included, it was really based, it's transaction based.
Right.
So while we have this number out here, this $10 million number out here, that's not what we're spending.
Right.
I think last year we spent $850,000. So was it worth $850,000 to get 20,000 policies out of Citizens? You bet. I'll make that investment every
Not to
single
mention
day.
the impact that it's had on the marketplace generally.
Absolutely.
Takeout.
Yeah.
Right.
So the costs, I think anyone questioning the costs of the clearinghouse compared with the actual results. And by the way, I want to continue to reinforce the fact that it's brand new. Right. We only have one product out of 7 different products, on there. We only have 8 companies doing the renewals right now. We'll have 22 at the end of the day. So I think you have to both take a look at Depop and clearinghouse as the catalyst for Depop, and then you have to take a look at the financials. Anyone looking at the financials will see that it was a tremendous financial decision.
Right. Well, I have to take this opportunity because I told you before we got up here. Admittedly, while we were proponents of the clearinghouse and worked very, very closely with you, your staff, and the legislature to make sure that passed in a way that we all felt comfortable, we had our concerns. We had members that, as I told you, thought the world was coming to an end, and that when you flipped that switch, things were going to go haywire. And for the size of that project that you all undertook, and for the minimal number of glitches and technology problems that you all have had, even though it is in its infancy, even though it's only been around for a year, you all are to be commended for the work that you all have done. I know that it is a tremendous task that you all have undertook, and I just want to take the opportunity to thank you for all of the time that you put in and for all of the time, listening to all of the stakeholders and you all throughout that process were willing to go back to Bolt and say, well, what about this? This isn't working properly, let's fix it. And I think made for what was about as seamless a transition as could be, thought, given the size and scope of that project.
And as you know, Kyle, we're still, we're not where we want to be on Depop, and we're not where we want to be on clearinghouse. We have a working committee. FAI is a member, as well as Steve Burgess, and outside parties like Jay Neal. We have 4 agencies that participate with us. We have a whole variety of people that are engaged with us now in the depopulation work group, taking a look at how we improve the process. Right. And we know we have a way to go in terms of improving the communication. However, I do believe that some of the issues relate to the magnitude of what happened in 2014 and the fact that Depop, in all likelihood, Depop will start dropping off to some extent. I still think there's opportunity there.
So an issue that is near and dear to the Florida Chamber is assessments and what they call the tax on our consumers here in Florida. We've talked about policy count, we talked about total insured value and the substantial gains that have been made there. What does that mean to the consumer and business owners in the state of Florida from an assessment potential
It's
standpoint?
huge. I mean, it's absolutely huge. I mean, I think this is where it all comes together. Chris Gardner, who, by the way, is a phenomenal chairman for Citizens, we throw one slide up all the time, and it's our red slide. And it shows basically that at the end of 2011, in the event of a 1 in 100 storm, we would have had $11.6 billion worth of unfunded liability. $11.6 billion. And you reduce that assessment. We embarked on on an initiative. My first conversation with Governor Scott was, Gilway, your number one objective is to get the assessment down. You do it 3 ways. 1, you build a surplus. We have been incredibly fortunate. No storm in 9 years. And my understanding is it's been not since 1851 when we started recording the story. Have we ever had 9 straight years without a storm?
That's the kind of information you could do without, right?
It's amazing. So, but it's allowed us to build surplus. So we built surplus from $5.5 billion up to about $7.4 billion. So $7.4 billion in surplus. The second way you reduce assessment is depopulation, and we've talked about depopulation and the impact that that's had. But the third, and probably the most successful initiative that we've launched in the last 2.5 years, is the risk transfer program. Right. I think, as you know, 2 years ago, we launched the largest cat bond in the history of the market, $750 million. Last year, we doubled down, and we concluded a $1.5 billion cat bond. And the pricing, the impact that has on our total risk transfer pricing is staggering. We had our 2013 pricing on our total risk transfer program, which at the time was $1.85 billion. And then you roll it forward to the following year, where we have $3.2 billion in the marketplace. We paid 16.7 rate on line over here, and we paid, last year, we paid 9.5 rate on line. And that included 7.5 for a $1.5 billion, multi-year cat bond. So that impact has been staggering, because basically we've gone from $11.6 billion in assessment to, we ended the year right around $1 billion. At the end of January, we are closer to $700 million. And our objective for going into the wind season is to not only eliminate the assessment load for a 1 in 100 storm. We'll definitely do that. But we have to get closer to the private market in terms of providing surplus protection. Mm-hmm. I think, as most folks know, companies really, OIR has a standard that basically says no company can subject any more than 25% of their surplus to any one occurrence. Because Citizens isn't there. Our number one objective is to basically say, look, we want to handle a 1 in 100 storm with no assessment potential. And we will be there going into the 2015 storm. We may get as far as having as much as 25-30% surplus protection, incorporated in our risk transfer. We'll end up with a total risk transfer program going into 2015, a little over $4 billion in risk transfer. And that, frankly, is a combination of those 3 factors is what drives your assessment load, down.
So 5 years ago, I mean, no one would have believed that you all would have that program in place. It really is. It's incredible that where we were, where we are now, especially to Florida businesses and individuals as far as the assessment goes. You touched briefly on rate and talked about what you all are doing moving forward. Just talk about 2015 outside of rate, but talk about DPOP programs and other things that you all have on the horizon that are priorities for you all to be working toward this year.
Yeah, well, I think, for the last 2.5 years, particularly the first year and a half, excuse me, we're kind of in crisis mode. I don't have to tell you that there was a lot of criticism regarding citizens, 2.5 years ago when I came in.
That's my comment at the beginning, that I don't think you knew what you were walking into.
Well, you do all the research in the world, and trust me, I did not know what I was walking into. But what I found was a phenomenal group of people.
Right.
I mean, they're just an extraordinary staff. So we've accomplished a lot. We talk about things like DPOP, et cetera, but over the last 2.5, 3 years, we've completely re-engineered our customer-facing systems. We just launched personal lines online. We've completed claims online, billing, and the claims, billing, commercial, and personal. January, that entire process has been changed. So, we were working on some fundamentals over the last 2 years. Going forward, we need to look more like a company that I'm used to running. We handle enormous amounts of confidential information. So we have initiatives underway, cyber liability initiative. We have a data security initiative. The advent, by the way, of the Inspector General has been positive. I mean, we now have a staffed Inspector General role. We have staffed up our fraud, analytics in terms of our OIA, internal audit, organization. Joe Tybold in SIU has done a much better job. But we have so many things to work on. We have a huge issue in litigation.
That's what I was going to add. That was the one other issue I was going to ask you about. Is you recently, there's been some reporting on some of the litigation management that you all have been undertaking and the result of that.
Yeah, I mean, we don't talk about it a lot, but the numbers are pretty staggering there. We ended up with we had 2,400 sinkhole cases in litigation. 2,400. We ended up working with Coordinating Counsel, Scott Link's organization. And the bottom line is we have now concluded a global settlement with 5 firms that are the principal firms behind these litigants. And, we're now closed. About 1,700 of those 2,400 cases are closed.
Right.
And, I'm moving towards, remediation. So it's out of the way. We had to make some compromises in order to get that done. Right. But the savings on citizens in the long run will be staggering because, the costs of 5, 6, 7 years of litigation are untenable. But we still have an issue. We had a year ago 13,000 additional open litigated cases. We're now down to 11,000. Over 50% of those are water damage. And we have a Miami-Dade problem. We have a serious Miami-Dade problem. What do I mean? 19% of the policies, 19% of our policies are in Miami-Dade. 68% of the litigation across all of Citizens is Miami-Dade.
Right.
So,
led by water claims, led by...
Good point. 50% of our claims are water damage.
Okay.
Now here's the interesting number. 85% of all the water damage claims we have come in, not through an adjuster, but through an attorney. 85%. So the challenge that we have is how do we get on the front end?
Sure.
We don't even talk to a customer. We talk to an attorney.
So the first time you hear about a claim is from...
We get a suit,
right.
85%. And it's, I will tell you, it's principally a Miami-Dade issue. Mm-hmm. And the amount of litigation that occurs in that, in that county is absolutely staggering. Not surprising when you go down there and you see the billboards. But it's a huge issue for us. And I think we've made a lot of progress on the litigation front. Mm-hmm. But the next step will really be to focus on loss adjustment costs and get those down. But you can't address allocated loss adjustment expense if 85% of your claims are coming in through attorneys. I mean, it makes no sense.
Right.
So that's probably a big part of the challenge next year.
And so do you think that that's something that you all can handle internally or through a regulatory matter, or do you think that that's going to require legislative action to address?
It will take a real hard look, from a legislative standpoint to really control that.
Okay.
And I know there's a session a little later on AOB, assignment of benefits. And by the way, for us, the assignment of benefits, we're a typical insurance company. We'll have a claim, and we'll have 7 suits on the same claim. 7 suits.
Right.
Because, assignment of benefits. I mean, it's really absurd.
Right.
So
Every
the assignment of
contract.
benefits, there's no question, the assignment of benefits, in the state is out of control.
Right.
There's no question. So I think there have to be some reasonable solutions on the AOB front, but that's not, AOB is not just the only issue we have from a litigation perspective. So we're looking forward to working with, all the constituents to determine what other legislative changes, we can work on,
Right.
in order to address, the overall litigation and water damage issue. And we're looking at things like managed repair. There are some companies that have done a great job with that, Florida Peninsula, People's Trust, Heritage now, and we've got to follow suit in that regard. So we are going to be standing up a managed repair program. I think that will be beneficial. That's going to require working closely with OIR and language. But that's not necessarily a legislative issue. That's more an OIR, issue. But we get phenomenal cooperation from Kevin McCarty and his group.
Well, I think that brings our time to an end, and I just want to close by saying one thing. I hear it from Jeff Grady, FAI's CEO, all the time, and he tells a story about how we, as an association, have been so fortunate to always seem to have the right volunteer leader at the right time. They're well equipped for the challenges that the association faces during that time. That could not be more true in your case, that you were the right guy at the right time, and want to commend you and your staff for everything that you've been doing, and look forward to continue working with you. So thank you so much.
Great. Thank you, and I look forward to working with all of you. Thank you.